Hi there, my name is Charlie Adams and I'm the Benefits Advice Services Manager at Bedworth Rugby and Nuneaton Citizens Advice Service. And today I'm going to be looking at migration from the so-called legacy or old style benefits onto universal credit and what that entails for claimants. And the reason for looking at this topic now is that the DWP is gradually moving all old style benefit claimants across to universal credit. And so I think it's useful for us to understand that process, what some of the pitfalls are, and who might want to jump ship early onto universal credit, as it were. So what we're going to look at is a brief introduction to universal credit and the legacy benefits that it replaces, the three types of migration onto universal credit, and when claimants can expect what's called transitional protection, which is a kind of compensation they can get if they're worse off on universal credit in certain circumstances. Just to give you a brief recap then on what universal credit is, it's a means-tested benefit, it's designed for people of working age, and it's paid by the DWP. It can be paid to people in work or out of work as long as they are on a low income and they don't have much in the way of savings. And the benefits it replaces are income support, income-based job seekers allowance, income-related employment and support allowance, housing benefit, and child and working tax credits. Please note that the contribution-based benefits, New Style ESA and New Style JSA, are not on that list, and that's because they still exist outside of the universal credit system. They are not replaced by universal credit. So because the 6 benefits on that list are being replaced by universal credit, you can't make a new claim for them, although of course with every benefit rule there are always exceptions. So here goes with the exceptions. Because the universal credit is a benefit for people of working age, that means that pensioners normally can't claim it unless they have a younger partner, in which case they might be able to claim universal credit. But most pensioners can't claim universal credit. So if they have rent costs that they need help with, pensioners can still make a new claim for housing benefit. Also, people of pension age or people younger, people of working age, if they're in supported or temporary accommodation, they can still make a claim for housing benefit. For some reason, universal credit doesn't cover those situations. You can also make a new claim for working tax credit if you are already claiming child tax credit and vice versa. So, for example, if you were in work and you were claiming working tax credit and then you had a baby, you could then add child tax credit to your working tax credit claim. Finally, if you are claiming old style contribution-based ESA, you can still make a claim for income-related ESA as a top-up. There are 3 types of migration onto universal credit. The first type is natural migration, then there is voluntary migration, and finally there is managed migration. And one of the reasons that it's important to understand the different types of migration onto universal credit is that it can affect whether or not you are entitled to a transitional element to protect you from being worse off. I think the best way of describing the different types of migration is by way of examples. So here's an example of natural migration. This is Barry, he's 40, he's moved from Coventry to Rugby recently, he works at Asda, and in Coventry he was claiming housing benefit. Now, because Barry has moved to a new local authority area, he will need to claim universal credit to get help with his housing costs, and that's because he can't make a new claim for housing benefit under his new local authority. This is an example of natural migration onto universal credit. Here is another example of natural migration. Helen and Misha have just had a new baby. Helen claims income-related employment and support allowance and PIP because she has a disability, and Misha is Helen's carer and she claims carer's allowance. Helen and Misha are not already on working tax credit, so they can't make a new claim for child tax credit, so they have to claim universal credit. When they claim, they will get the child element of universal credit for the new baby, and Helen's income-related ESA will stop because income-related ESA is replaced by universal credit. Of course, Misha will continue to get carer's allowance because that's not replaced by universal credit, and in fact, she should also get the carer element of universal credit now. Helen and Misha are another example of natural migration onto universal credit. So in general, natural migration is where you have a change of circumstances, and because of that change you need to make a claim for universal credit. So we've looked at a case where somebody moves local authority area, and we've looked at a case where somebody has a new baby. You might also need to naturally migrate onto universal credit because you've lost your job, or you've become unfit for work, or your hours of work have reduced, or you've started a new job, or you've moved in with or separated from a partner and you now need to claim means tested benefits. So in terms of our three types of migration onto universal credit, we've now covered natural migration. So I'm going to go on to talk about voluntary migration. Naomi and Kingston live with their 2 children and they claim child tax credit. The couple find out that their friends are claiming universal credit and they're told that they might be better off moving across, so they decide to make a claim for universal credit instead of claiming tax credits. This is an example of voluntary migration onto universal credit. So as the name suggests, voluntary migration is when you voluntarily choose to make a new claim for universal credit. It might be that you believe that you'd be better off on universal credit than on your current benefits, and some people are better off on universal credit. Generally speaking, people who are better off are those in work because there's less of a reduction due to your earnings on universal credit. It's more generous. However, I would always say do a benefit calculation before you give this advice, or get the claimant to go away and do a calculation on one of those free benefit checker websites, mainly because once you've made that switch onto universal credit, you cannot go back. You're stuck. That's it. And even if you find you're worse off on universal credit, tough. Another consideration is the fact that universal credit is paid monthly in arrears, whereas most legacy benefits are paid fortnightly, and there is a 5-week wait for your first universal credit payment. Okay, so we've covered natural migration and voluntary migration. But before I go on to talk about managed migration, I just want to talk a little bit about severely disabled people under natural or voluntary migration. So some people on the legacy benefits, income-based job seekers allowance, income-related ESA or income support might get a severe disability premium in their benefit. So the SDP is generally paid to people who live alone or they live with other disabled people, and they're in receipt of a disability benefit such as PIP or DLA, and they have nobody claiming carer's allowance in respect of them. And it's worth knowing that the SDP is worth quite a lot of money. On the 2023 to 2024 benefit rates, it's currently worth £76.40 a week. In contrast to the legacy benefits, universal credit does not include a severe disability premium. And in fact, between January 2019 and January 2021, people who got the severe disability premium should have been prevented by law from claiming universal credit. And if for any reason you did end up claiming universal credit in that situation and you lost your severe disability premium, you should be entitled to some compensation. So according to the current rules, which have been in place since January 2021, if you or your partner got the severe disability premium on your legacy benefit, in order to prevent you from being worse off, you should be entitled to a transitional severe disability premium element if you transfer to universal credit via natural or voluntary migration. And the reason for this really is the Equality Act, which protects people with disabilities from discrimination. To get the element, your new claim for universal credit must be made within 1 month of you receiving a legacy benefit, including the severe disability premium. And the transitional SDP element can't be paid to you if you've become a couple with somebody already on universal credit. So here's an example of the transitional SDP element in practice. We have Nadia, who has chronic fatigue syndrome, depression and anxiety. She claims income-related ESA, PIP and housing benefit, and her ESA does include a severe disability premium. However, she's decided to move from Leamington Spa to Bedworth to be nearer her mum. Now Nadia is in Bedworth, she has to claim universal credit to get help with her rent because she can't make a new claim for housing benefit. So Nadia makes a claim for universal credit, and her new award starts within a month of her old ESA entitlement ending. She is going to be entitled to a transitional SDP element in her universal credit so that she's no worse off. Interestingly, there has been a recent challenge in the courts on the basis that people that get the disability premium and the enhanced disability premium currently don't have transitional protection. So it looks like the regulations of universal credit are just about to be amended to also give transitional protection to those claimants as well. Okay, so we've covered natural migration onto universal credit and voluntary migration, and we've looked at severely disabled people who are transitionally protected when they naturally or voluntarily migrate onto universal credit. And lastly, we're going to go on to talk about managed migration and what that entails. So managed migration occurs when you're claiming legacy benefits and DWP writes to you to say that your legacy benefits will end and you need to claim universal credit instead. And DWP is aiming to migrate all claimants onto universal credit in the next 5 years. In 2023 to 2024, the DWP is aiming to transfer all tax credit claimants onto universal credit, and I believe that for those people living in Mercia, which incorporates Warwickshire, that transfer is going to start in April 2024. Between 2023 and 2025, the DWP is aiming to transfer all income support, income-based job seekers allowance and housing benefit only claimants onto universal credit. Claimants on income-related ESA may not be transferred until 2028 to 2029 according to the current schedule, although of course that may be subject to change. Under the managed migration process, the DWP cannot force you to move onto universal credit and leave you worse off than you were on legacy benefits. Therefore, if your total legacy benefit payment is more than you would get on universal credit, the difference is paid to you every month as a transitional element. You can't claim this transitional element if you were claiming universal credit as a single person and you're now claiming as a couple or vice versa. Your circumstances have to stay the same when you transition across. Over time, your universal credit entitlement is likely to increase. For example, every April, benefit rates tend to go up. And so this would reduce the amount of your transitional element until it would eventually stop. The transitional element will also stop if your claim for universal credit ends and then later on you make a new claim. So the difference in terms of transitional protection under managed migration is that you're transitionally protected from being worse off whether or not you have a disability under managed migration. Whereas if you naturally or voluntarily migrate onto universal credit, you're only going to be transitionally protected in terms of disability premiums. So what is the managed migration process? Well, to start with, the DWP will send you what's called a migration notice, and we'll see an example of one of those in a minute. The migration notice tells you that your legacy benefits will end, and it invites you to claim universal credit instead. This migration notice gives you a deadline by which you must claim universal credit, and the date of that deadline should be at least 3 months after you receive your migration notice. The deadline can be extended if you have good cause. Your legacy benefit entitlement will end on the day before the deadline you've been given to claim universal credit. If you miss the deadline and you don't claim universal credit in time, you're then given an additional month to claim. So effectively the deadline's extended by 1 month. However, if you miss the later deadline, you can still claim universal credit, but you won't get any transitional elements in your award. So here's an example of a migration notice. The key thing to notice here is the date that you must claim universal credit by. If you're looking at a general information leaflet or letter, it will not have a deadline date on it. Here's an example of managed migration. So we have Mary, who claims working tax credit. She receives a migration notice from the DWP telling her that her working tax credit is going to end and that she must claim universal credit by the 1st of November 2024. To begin with, Mary completely ignores the letter, and her working tax credit ends on the 31st of October, which is the day before the deadline. She's then sent a reminder telling her that the deadline for claiming universal credit has been extended to the 1st of December. Mary then gets in a universal credit before the 1st of December deadline. Her new universal credit award includes a transitional element which protects her from being worse off on universal credit. If she'd missed the second deadline, this element wouldn't have been included in her new universal credit award. Remember Naomi and Kingston? Well, they decided to voluntarily migrate onto universal credit because they thought they'd be better off. And they may have also known that eventually they'd have to migrate onto universal credit anyway. Well, unfortunately, after claiming universal credit, they realised that they're actually worse off than they were before. Naomi and Kingston now can't go back to legacy benefits. If they'd waited until they'd received a managed migration notice, the transitional element would have protected them from being worse off. One of the reasons I'm sharing this example is because some people are receiving letters or information leaflets telling them that they will eventually have to migrate onto universal credit, and so they're making the switch straight away. But the problem with doing that is that they won't get the transitional element. They would only get the transitional element if they waited until they'd received their managed migration notice. Okay, so we have now covered all types of migration onto universal credit: natural migration, voluntary migration, managed migration, when severely disabled people get transitional protection, and when everybody can get transitional protection. Hopefully that's been clear and hopefully it's been useful. Right, that's it for this training session on migration onto universal credit. Thanks very much. And if you have any questions or if you have any feedback, then that's my email address there, charlie.adams@brancab.org.uk. Thanks very much.